Good morning, everyone. Welcome to NRBP's Annual Real Estate Market Forecast, Part 1. I'm Barbara Kaufman, Executive Vice President of Newark Regional Business Partnership, Executive Vice President and COO. I'm very pleased to welcome you to today's virtual program. We held this program last year completely virtually, and the last time we were together for it was March 5th, 2020. And as all of you know, that was very, very close to when we all entered into our pandemic mode. So we're very happy that we're here today virtually and that we'll be with you tomorrow. We have reasons to be hopeful, in addition, as Newark emerges from the pandemic, but without a doubt, the landscape has changed dramatically. One just needs to walk in downtown Newark to see that the impact is still very, very present. But this is a time of unprecedented change, and particularly in the office market, as decisions continue and we see which companies stay remote and which companies come back, we'll have a better idea of what's going to happen for the future of the office market. We do know that we've seen really impressive recovery. For example, after September 11th and Hurricane Sandy, Lower Manhattan rebounded with great alacrity. So it's very possible that we'll see a tremendous resurgence as we come back. We just don't know exactly what's going to happen. And we do have some exciting things happening, as you'll see tomorrow on the residential side. And for today, you'll hear about the exciting renovations to the Gateway complex. So there really is a lot going on. Please remember to contact NRBP, all of us, for help with introductions that you would otherwise make in person if you're only able to be with us today. Before explaining today's format, I'd like to thank our sponsors. We could not offer our programs without them. TD Bank is our series sponsor of the Real Estate Economics and Development Series, so thank you to TD. If Scott Beresford is able to join us at the end of the program, then he will give a brief welcome on behalf of TD, but he will be with us tomorrow. And our event sponsors are Genova Burns LLC, Grant Engineering and Construction Group LLC, KSS Architects, LMXD, an affiliate of L&M Development Partners, NJEDA, Onyx Equities, PSE&G, Structural Workshop, and Turner Construction. Our media sponsor is NJ Advanced Media. Thanks to all of them, and if you're interested in sponsoring the program, please let me know. We're particularly grateful to Maya Curry of the NRBP team, who's our VP of Communications and DEI leader, and she will be available throughout today's program to help with any technical issues. I'm going to be transitioning between each of today's speakers, and at the end of all of the presentations, if there's time, we will take your comments. So if you have questions, put them in the Q&A, and we will refer to them. If we don't get to them by the end of the program, then we will answer them as best we can following the program. Maya is going to put resources and suggestions into the chat, so do watch for that. If there's anything important, any links or anything like that, they'll be there and available to you. We're going to begin with the economic forecast, and then we're going to move into two panels, first on Penn Station and then on the Gateway complex. If you're not yet a member, please contact us, and especially about the benefits of membership. And thank you very much for joining us today, because our audience is so important to our success of these programs. As I said, I'll be transitioning between the different speakers, and it's now my great pleasure to introduce Richard Kasmin, Chief Economist at NJEDA, for the economic report. Richard.
Great, thank you very much. Thank you to Newark Regional Business Partnership for inviting me once again to discuss the outlook. And so the title is Real Estate Outlook for 2022, Fundamentals, Inflation, and Interest Rates. So what I like to do in my presentation is really start with more of like a macro view of what's going on, in the United States, and then focus down into what's going on in our local real estate market, how I see the fundamentals and all that. So title of this slide, which is just really just a summary, the outlook for 2022, the easy part is over. The reason I say that is because we've had so much monetary and fiscal impetus in the economy over the last couple of years from COVID, that it's really sent a wash of money into our economic system. And the easy part is over because now we're looking at a lot of potential tightening of those money flows and how that'll affect interest rates, real estate, and whatnot. Bottom line is right now, demand drivers remain very strong in the economy. So consumer spending, investment, all remain very solid. Housing fundamentals also remain very solid. As we'll look in my presentation, also other presentations as part of this whole meeting, Newark is seeing a surge in multifamily real estate investment. The main issue right now is inflation has firmer footing than the Fed expected. And at least the way I see it, the Fed seems way behind on the inflation curve. So the risk is for more rate hikes than what's priced in. And obviously real estate being very sensitive to interest rates, that's a risk. And then of course, everything that's going on with Russia and Ukraine and geopolitical risks, and the risk of recession from that is not zero. So first, starting off with GDP and demand, I like to start off with just the International Monetary Fund's economic outlook, just to give you an idea of what they're seeing in terms of growth. So according to their model, they still expect very strong growth in 2022 for the US, 4%. That's still well above any sort of underlying trend growth rate for the US, if you just think about labor and investment and the capacity there. They really don't expect significant slowing until 2023. And I understand that growth outlook because, as I said, the demand drivers, even with the tightening that we're seeing in fiscal and monetary policy, still look very supportive. Of course, that's a big if, and the big if right now is that oil prices and inflation aren't continually rising and causing the Fed to hike more, and oil prices, as I'll show, are a big risk right now given the geopolitical setting. This is just a look at GDP over the past 20 years or so. So you can see more recently in 2020, we had a big drop in GDP, obviously because of COVID, because of all the fiscal and monetary stimulus. We've really shot out like a cannon from that. And we're back on what was pretty much the trend of growth pre-COVID. So it's been a remarkable rebound in activity that we've seen. And at this point, if anything, maybe we're even growing a little bit above this trend. And that's one of the reasons that we're seeing inflation pressures, is because we actually have a little bit less capacity to grow, given that the labor market has shrunk. So we're doing this growth with less labor. And so that's one of the things that's raising inflation pressures. Even during the depths of the recession, not all industries performed badly, and actually a lot of industries in New Jersey did exceptionally well. So here I'm looking at growth indexed by different industries since right pre-COVID. So you can see some industries like information, finance, insurance, manufacturing, actually for the most part continued growing, and then actually grew much faster than underlying GDP. So these are some high value added industries here in New Jersey. So what we've seen is a bit of a shift in the way the GDP outlook looks for New Jersey. A little bit less in terms of things like entertainment, food services, things like that, and more GDP now in some of these higher value added industries. Obviously, that's very supportive for certain areas of the commercial real estate and residential real estate markets. A lot of business application growth in New Jersey we've seen since the COVID hit. So these are applications to start a new business, and they're called high propensity because they're expected to not only be like sole proprietorships, but also businesses that will employ people. So these are considered to be quote unquote real businesses in terms of increasing the amount of labor demand in the economy. So as you can see from this chart, we were running at about 3,000 applications per month in New Jersey pre-COVID. Now we're running closer to 4,000 per month. So something like this is very supportive of the economy for the state, also supportive of certain areas of CRE. Personal income. So this gets to the ability of the consumer to spend. So we're looking at a trend of consumer income through 2020 that was on that blue line. And then because of all the fiscal stimulus, so things like checks being sent directly to people, we saw actually a boom in personal income from COVID. And all of that wasn't spent. So what that means is that the consumer still has wherewithal to spend continually, even if personal income returned to this pre-COVID trend. You still have, what you see is savings that could certainly be used to spend. And one of the reasons we're seeing inflation is that the consumer has the wherewithal to absorb some of that inflation. And that's causing a little bit more of an inflation cycle than just sort of a one-off transitory inflation that the Fed was expecting. So lots of wherewithal to spend. Another area that we have wherewithal to spend is extraction of cash from the housing market. So I say it's back because last time we saw so much cash being extracted from the housing market was right before the housing market crash in 2007. What we saw back then, and we see that now, is a lot of people refinancing their mortgages. And when they do that, they can extract cash value from the house and use that for investment, spending, sometimes paying down debt, all sorts of things. So we're back to this very large amount of cash being extracted from the housing market. That's also supporting spending. So this is about, this could on its own just lift consumer spending about 1% versus its trend. So this will continue to support demand. The concern of this is always that as people are extracting value from the housing market, it's lowering the amount of equity that they have in houses. And then if home prices should fall, then you could lead into defaults and foreclosures. But I'll show at this point, this is not a concern, and that's why it's different. Also, household net worth. So in the way we usually look at this is as a ratio to income. So net worth is all the value that households in the United States have in their stocks, bonds, real estate, all sorts of assets that they have, and minus the liabilities that they have, and look at it as a ratio to their income. So this also tells us something about spending ability in the US economy. And as you can see, we're at all-time highs. At least, this is going back to 2000. I could go back further, much further, and would show that we're at all-time highs of net worth relative to disposable income. So once again, lots of spending ability for the consumer heading into this year. So the negative is obviously we're seeing a lot of inflation. And with all the consumer spending wherewithal, what we're also seeing is that demand shift is abutting against constraints in supply. I think there's been a little bit too much made of the fact that this is a supply problem. To me, it's much more a demand issue, and that demand is just running so hot that supply can't keep up. That's causing inflation. So you see in consumer sentiment here, this is the University of Michigan's Consumer Sentiment Index. We're seeing that inflation now eroding the consumer's just sort of feeling of how the economy is doing. So even though the labor market is incredibly hot, even though spending is very strong, will probably continue to be strong, the consumer really hates inflation. Will this start to slow the economy because the consumer starts to pull back because inflation's rising? Definitely a risk. So far, we haven't seen a lot of evidence of that. But certainly if inflation continues to be hot, we could see the consumer pull back. Here's one of the main risks that I see right now in the economy, oil price shocks. So look, Russia is, I think last when I looked, it's about 10 million barrels per day of about 78 million barrels per day of production globally. So we certainly wouldn't want to see a world where oil from Russia is turned off, and that would cause a huge spike in oil prices. There's certainly the wherewithal of some countries like Saudi Arabia to pump more. Should that happen, of course, there's also reserves that plenty of countries have. But this is a risk, right? I mean, even those things, if they happen, they don't just happen instantaneously. So, you know, we're certainly seeing oil prices now rise to above $100 a barrel. If we got up to $125, $150 a barrel, historically, those are levels that would be enough to cause a recession. So to me, this is one of the main risks of what's going on in Russia is oil prices and the shock that that could put on the economy. Just talking a little bit about the government and the government impact on the economy. So obviously, as I said, fiscal policy is becoming, you know, more restrictive. So we saw so much money fueling the economy for the last couple of years. That's starting to now ebb. But here in New Jersey, if anything, there's continually more money coming into our system. So from the 2020 New Jersey Economic Recovery Act, we have multiple areas of different types of financing for small businesses, for employment, brownfield redevelopment incentives. Obviously, in Newark, recent news of food desert money coming into multiple areas of Newark. And there's also a New Jersey Investment Evergreen Fund that is being developed right now, which will invest money with the government, the state will invest money alongside the private sector. So there's lots of different areas of policy here in New Jersey that will continue to flow money into areas, multiple areas of the economy. So I just wanted to point that out. So just a little bit of a deep dive into inflation. So here's inflation in our region, which is the Newark, New Jersey CPI versus the rest of the US. So certainly running a bit hot here, but not running anything like what we've seen in the rest of the US. I think probably the reason for that is that New York City has seen a more of a dampening effect on demand than the US as a whole. So, and I think that is spilling into our region. So, you know, it's a two-edged sword. Obviously, to have a very weak New York isn't necessarily a great thing for the rest of our region, but it is probably keeping inflation a little bit lower. Commodity prices, all different types of commodity prices rising at a fast clip, continuing to do so. So the Fed has made the case that, well, this is transitory because we're just seeing some rise in costs that will start to dissipate once the economy gets back to its trend and all these sort of supply pressures dissipate. That's just not happening. We're still seeing lots of commodity prices continue to increase. And of course, as I said, add oil right now is as an increased risk for inflation. In terms of spending and how spending is impacting inflation, so you can see these are goods and services spending relative to their trends. So you can see on that bottom area, goods spending relative to its trend that existed before COVID. You can see that goods spending really popped up. So maybe about 20-25% higher than the trend. So that's a lot of where we're seeing the inflation in the economy, is that goods spending really substituted services spending. Continues to be the case. There's just now, hopefully what we'll see is more of a balancing out where maybe more services spending happens and a little bit less goods spending. That will help dissipate some inflation pressures if that happens, because we just haven't seen the amount of inflation thus far in the services sector as we have in the goods sector. Supply chains, obviously a problem. Not a problem to the extent that it's a supply problem first. It's that demand is very strong and supply can only keep up so much. So this is a measure of supply chain pressures that the Federal Reserve put together. And we're looking at standard deviations from average to see, okay, on average, how has the supply chain looked in terms of its ability to keep up with demand, and where are we now? So you can see from this measure, we're something like 4 standard deviations away from what our average supply chain pressures. And that's obviously also adding to inflation. And lastly, look, it's not just about goods and services, it's wages. And wages are going to be a big driver if inflation is going to continue to be a problem. So far, we are starting to see some more inflation pressure in wages. So this is a measure from the NFIB, their small business group that looks at, it surveys their constituents and asks them what they see in the market. Many of them are seeing the need to continue to raise wages. So continually, not just one-offs, but higher inflation in wages. And as you can see, that does map pretty well with what we actually see in the market. So this is another reason that we should be concerned about inflation, is that it is feeding more into a wage spiral. And then how this affects interest rates. So the monetary policy is set by the Federal Reserve based on models that they use that try to understand where the economy is versus some idea of the trend that is sort of like at stable inflation. And there are multiple models that they use. One sort of rule of thumb is this thing called the Taylor rule, which looks at some expectation for what a neutral real federal funds rate is, where inflation is today, and what the labor market inflation versus the target look like. And using that rule of thumb, the Taylor rule says that the Fed funds rate, which is actually still just above zero, could be as high as 10%. And by no means do I prescribe to the idea that we're going to be getting the Fed funds rate from 0 to 10%. That would be a disaster. Some inflation will come down, some of it will be transitory. So we're not going to be at these continually high inflation rates. The real takeaway from this is that wherever policy should be, it's not there right now. So we're going to have more interest rate hikes than what's even priced in right now. So I would expect, by this time next year, we have at least 200 basis points of rate hikes. Of course, that notwithstanding anything that could happen from a recession, if there was an oil price shock, that would cause a whole other bag of problems for the Fed and everybody. But so bottom line is inflation is a problem. It will feed into interest rates, and of course that affects real estate. So real estate fundamentals. So first of all, here I have a chart that just looks at a measure of affordability for the housing market versus existing home sales. And the affordability index is basically a function of income, principal on mortgages, and interest rates. So as you can see already, as we've started to see a rise in interest rates and a rise in prices, you've started to see affordability come off. So affordability is starting to decline in the housing market. That'll probably continue to be the case. And with that, you should expect to see some slowing of housing activity. If mortgage rates were to rise another 100 basis points from here, you'll probably see another 10% decline in affordability. And so these are, the interest rate side is certainly a bit of a negative for the housing market. The other thing, though, the good news for the housing market is that incomes are rising very strongly. So that offsets somewhat any impact from interest rates. As I said before, there was a bit of a concern about the fact that people are extracting a lot of money out of the housing market and how that could affect homeowner equity. And so if prices should fall, how that would affect the market. The reason this time is different is because even as people have been extracting cash from the housing market, homeowners' equity share has been rising. So it actually shows a more careful, thoughtful housing investor this time, who's not just looking at their house as a piggy bank to just take all the equity out of it. Homeowners' equity share is very high. So this shows that there's a good cushion in this market. Should prices fall a bit, homeowners on average still have a lot of equity in their homes, and that will continue to support the investment and paying mortgages and all those things. As you can see here, mortgage delinquency rates through the end of 2021 are historically low. through all the states. There's New Jersey on there as well. So up to now, obviously having low interest rates, also having moratoria on some areas of the housing market, having to pay rent and mortgages and things like that. That also helped, but we're through that now. And so mortgage delinquency rates still remain very low. So once again, supportive of the housing market. Fundamentally, a very supportive part of the housing market is that we're starting to finally see a reversal of home ownership rates amongst all age, well, really amongst younger age groups. So bottom line there is that 35 and under group. The green is the 35 to 44 age cohort. We're finally starting to see these cohorts become more interested in home ownership and have a higher percentage. So once again, that's a fundamental that is supportive of the housing market. This is a chart that looks at the level of housing permits as a ratio to the rate of home ownership of household creation in the economy. And that red line is the average that we've seen for this history. And you can see that as a ratio to household formation, we're still seeing a bit of a low level of permits. So that means that we're still somewhat underinvesting in terms of new homes, given the household rate. So with more people looking to buy homes, a higher percentage of these households are also interested in buying. So bottom line is, obviously we had the bubble in the early noughts, and that collapsed the housing activity. We're still coming out of that, but to me, it still seems like we're underinvesting in housing. In terms of lending standards in the market. So this is looking at the Federal Reserve Senior Loan Officer Survey, asking banks and other credit institutions, are they tightening or easing lending standards? And that blue line is the net tightening versus easing. So anything below zero is that more banks are easing lending standards, they're tightening. So even as we've started to see interest rates start to rise, and we've started to be concerned about the Fed, banks continue to be very constructive in terms of lending standards. They want to lend more. And so that's obviously a constructive thing for the housing market. Same thing in commercial real estate. So we're seeing lending standards really start to come off. So the green line in this case is lending standards, so it's below zero. Non-residential structures investments actually been very low since COVID hit. So that blue line is just like a real index of commercial real estate in the U.S. And so we've seen a big drop off here. So also, once again, an area that is going to be obviously very impacted by what's happened in office demand. But office demand isn't the only thing. There's many different areas of commercial real estate. And so at least nationwide, we seem to have seen a real drop off in the level of commercial real estate investment. That probably will rebound pretty solidly going forward, especially as the economy starts to return to normal. One area of concern is the expiry of monthly distribution of the child tax credit. So that's causing some stress in the rental market. So these are percentages of New Jersey households who say they are caught up on their rent and their mortgages. So we've recently seen a rise who are not caught up. We've certainly recently seen a rise in the percentages of New Jersey households who say they are not caught up. And that does correlate with the expiry of these child tax credits, that the monthly distributions. So I think that child tax credit was very important for certain segments of the market. It was about $500 per month for many households. So that now that that's expired, it does seem to be causing some stress and something to watch. So just focusing more on Newark's real estate market. So there's a lot of numbers here. I'll do my best to explain it quickly. So what we're looking at is New Jersey households in Newark. There's two types of households on here. There are family households and non-family households. And I'm looking at the growth of households. and the percentage that each of these type of households make up of Newark's aggregate of households. So as we can see, first of all, if you look all the way left, total households for the 5 years through 2019, unfortunately, we don't have more recent data yet, up 9%. A growing percentage of that household formation is what we would call non-family households. So single family households, things like that, up 21%. They now make up 40%, at least through 2019, of total households. Now, the issue there is, non-family households generally aren't looking to buy. But so if we're looking at rent versus buying, so just in aggregate, this is solid growth of households in Newark. So there's good demand for Newark. But then looking at renting versus buying, historically, non-family households are more renters than buyers, but the evidence actually suggests that some of these non-family households are more interested in buying than they have been in the past. And if we just look all the way right, the non-family households, owner-occupied housing units as a share of total, we've gone up from 14.7 to 16.1% of households actually owning through 2019. So we're seeing a growing percentage of households interested in owning in Newark. The unemployment rate, so just a quick snapshot of Newark's economy. So still obviously suffering the impacts of COVID. The unemployment rate remains elevated, above 8% versus what we're seeing in New Jersey outside of Newark, and these are not seasonally adjusted data. But anyhow, in New Jersey, we're looking at something more like a 5% unemployment rate unadjusted at this point. So still, quite a lot of stress in Newark relative to New Jersey. Now just looking at some of the activity levels. So new homes sold per month had a very solid 2021. Rebounded something, I think it was about 15% year on year. So lots of homes sold relative to where we were even for recent history. So a solid year for 2021. Inventory remains very tight. So that green line is your inventory to sales ratio. So basically some idea of, given the inventory that exists, how many months would it take to sell that off? It would only take 2.5 to 3 months to sell off the current inventory. So a tight inventory relative to history. And as a function of that, you've seen prices really rising very strongly. So prices up 17% in 2021 as inventory remained tight. Now looking at some of the areas of commercial real estate. So first, industrial, in looking at the vacancy rate and rent per square feet. So the industrial vacancy rate, historically low here in Newark, just above 1%. And with that, we're seeing a lot of significant increases in rent per square foot. This is all data that we get from CoStar. So if you look at the price now versus where we were in 2016 of rent per square foot, almost doubled. Not that surprising, given when you consider Port of Authority data shows that cargo volume coming through up 27% versus pre-pandemic levels. So, I've been on the phone with some of the folks at Port of Authority. They've been doing, that port's been doing just an incredible job given lack of resources to be able to handle this much more cargo coming through. And a lot of that obviously ending up in demand for industrial space, not only in Newark, but the whole region. Offices, obviously a different story. Newark's office vacancy rate continues to be very high. And with that, we're seeing still just sort of stagnant prices per square foot. Certainly the economist in me looks at this and says, well, maybe prices need to start falling in order to increase demand. Usually hard to see in housing, in rental, but that is a possibility. Multifamily real estate, just surging activity here. So you can see on the left, the level of activity. We're seeing just multiples in terms of units under construction versus where we were just a few years ago. And even with all that activity, all that supply coming on, the rent per unit continues to rise. Obviously, the increase in supply keeps the ability for these prices tamped down because we're getting so much supply, but still very healthy market. And just wanted to highlight some of the major projects going on right now. And some of these will be discussed in later sessions, even today. So tomorrow, some of the sessions will discuss the Newark Stadium site redevelopment. That's for 4,200 apartments. And the Newark Art Museum, an $85 million apartment retail project. The L&M development is joining forces with Newark Art Museum on an $85 million apartment rental project, I should say. So just lots of projects like this, and also the ACR Holding Securities $90 million loan for the first phase of a Newark high-rise project. So lots of lots of multifamily real estate projects in Newark. Also, right following my presentation, there'll be a discussion of the Newark Penn Station $190 million renovation. So just, I'm in Newark all the time, and it's amazing to me to see all the development that's going on. So as much as there's this overlay of risks around, the US interest rates and all that, a lot of these projects are already going. So that's great. So lots of supply coming on, lots of activity in Newark, and just a very supportive environment. And then also just lastly, I always like to make it clear that it's not just about, big multifamily projects. There's a lot going on also with the community in mind. So Newark has been designated a transit village. So that means that the state creates a task force to help implement mixed use development near the transit facility to create pedestrian friendly downtown environment for mixed use. So we're seeing just lots of interest in Newark, obviously in the private sector, public sector, lots of money still coming in. So household development, all these things. So lots of positives for the Newark outlook, and lots of reasons to be optimistic. So thank you very much. It's been wonderful to present here again.
Excellent. Thank you so much, Richard. A very, very informative presentation. There were questions about whether the presentation would be available afterwards. If you watch for your thank you for attending email, it will be included there. And just one comment on the mention of home ownership, that it's been an issue in the city that's been particularly important to the mayor to increase the home ownership for the residents of Newark. And one of the projects we'll be talking about tomorrow, Fairmont Commons, includes a combination of affordable rental and also home sales. So it'll be interesting to hear about that one. The next presentation is going to be by Robin Persad and Richard Schaefer of Newark Penn Station, followed by Deputy Chief of Police Andrew Crow. And one particular note about Penn Station is that in previous forums, there's been a lot of discussion about the state of Penn Station. So I'm sure all of the developers and anyone who uses the station will be very happy to hear of the improvements going on and what's in store. So with that, I'm going to turn it over to Robin and Richard, and they are going to introduce the Deputy Chief following their program, and then I'll come back to introduce Matt Flath to hear about Gateway. Thanks so much.
So, good morning. I'm Richard Shafer. I'm the Chief Engineer of Capital in New Jersey Transit. Newark Penn Station is one of our landmark projects. We are going to go through and rehab this station and make it into something that is the icon of Newark, a true community center. At least now you have a preview of what's coming next. So the station was constructed in 1935. It replaced the original station, which was more of a traditional frontier style. There are a lot of pictures of that, so there's no sense discussing it. It was kind of an innovative project for its era. It was half funded by the city and half funded by the railroad to create what would be a community center for Newark. It is magnificent. For those of you who had the chance to walk through it, there are many spaces that have been preserved well and are untouched. The view you see here is the grand waiting room, which is in many ways almost identical and in far better condition now than it has been in many decades, thanks to the ongoing work that Robin Persad has been leading. It was designed by the notable architecture firm Kim, Mead & White. If you don't remember them, that's fine. but it was the same firm that was heavily involved in the New York Penn Station before its demolition. So a lot of the same architectural details from that lost station are present here. There are a lot of neoclassical elements. I could talk for hours about the architectural history of the building. I won't, but there are many views and vistas inside that are dramatic. And one of the things that we want to do is, as we highlight this as a place where people come to New Jersey, a gateway to New Jersey, you stop and you have the opportunity to appreciate these things before entering the city and not just moving along to New York City or Philadelphia or some other destination. We want this to be a destination, not a waypoint. Next slide, please. To that end, the station itself, because of the era of design, it is by modern standards somewhat dark and closed and difficult to navigate. So making it welcoming, bright, vibrant, with color and invitation for foot traffic, not only in the station, but to walk out into the city, are core features of what we're trying to accomplish here. We are the gateway to the region. When you walk off your train, you're almost obligated to walk downstairs to the Grand Concourse into the station. We want to make certain that when you walk down those stairs, you see a bright modern station and you have the opportunity to walk around and think about Newark as a destination. Many of the amenities that we're going to provide are there for customers. We're going to increase value capture inside, opportunities for market space. Businesses will have an opportunity when you walk outside the station. It will no longer be what I derisively refer to as Frogger. As you try to get into Gateway, there will be an open, inviting area for people to enjoy, as well as when you walk on the other side through the Ironbound, the same experience. You should want to walk out and enjoy the station. A lot of the contemporary issues that were not present at the time of construction, public health protection, which will be discussed later, future transportation needs, some of the things that we consider now that were not considered, microtransit. You see the scooters all over. Ride shares are a big part of how the station interacts with the rest of the city. A lot of the foot traffic to and from the businesses and the downtowns that are around the station are there. There is now park space being developed on the riverfront. We want to make certain that that's contiguous with the vision for the station so that it does fulfill that original goal of being a community center. And of course, climate change. We are next to the river. We were damaged in Sandy. We want to make certain that as a central transportation hub, people know that when you go to Newark in any event, it's there and it's reliable. So the proposed plan. This is a nice breakdown. The station is very complex. It has a lot of features built into it. It was very ambitious for its time. It incorporates all the modes that one would anticipate of any major city investment. We have the commuter rail on the top level. The concourse gives you access to our complete bus network, local jitneys, foot traffic, ride share, microtransit, scooters, whatever you'd like. And then on the bottom level, we have access to our light rail system, which stretches as far as Bloomfield in one direction and provides that seamless connectivity to Broad Street Station, where a lot of TOD is going on right now. It is a transit community, as the last presentation discussed. So to be able to tie this together into one contiguous system, there are different levels throughout the station which provide that. And that's where we're trying to go and reinforce the good bones that are already there and make something that really is the linchpin of making Newark that great city that it is. Some of the things that are worth talking about is the exterior is being restored as part of the program. So much of that work is already underway. Platform level, what you see on platform E, or what you may know as track 5, is going to be our standard of care for the rest of the platforms. We are going to work through them one at a time, just for operational continuity. Platform D is next between tracks 3 and 4. And then we hope to do platform A pending some grant opportunities, which is all the way on the far side of track 1 against the Ironbound. And then the other platforms will follow suit. You've seen the restoration of the ceiling. The structure of the building on the platform level is magnificent. It was done with an architectural style you don't see anymore. So we're going to do restoration, dramatic lighting. When you get on or off your train, when you wait on that platform, we want you to appreciate that experience. The concourse level. has changed dramatically over the course of its life. The original barber shop where the liquor store is obviously gone. That continuity between the concourses, where some might know the McDonald's and some might know the main concourse. We're looking at a more open, better lit, more dramatic environment where people will feel welcome. They want to be there. They want to enjoy the businesses. They want to stay and be in the city. The waiting room is currently under restoration. We've eliminated the plywood Dunkin' Donuts. It has moved to a permanent location inside the concourse. It feels much brighter and more open already. The outside environment, we're looking to make it inviting outside and in. When you walk to the station, you should know it's a station. You should be comfortable outside and inside the station as a community center, as well as a transportation hub. And of course, improvements for accessibility for all. There's no reason the station shouldn't be accessible for anybody of any opportunity or origin to be able to move in and through the station, which is the current FTA best practices standard. Where we're going with this, first up is the station master plan, and it's worth taking a moment just to talk about that. The master plan is more than just how do we restore the station. There is that aspect, but there is also the greater outdoor aspect. One of the notional goals that we are trying very hard to achieve as part of this is an increased continuity and just better synergy between all of our different modes and how we work through the city. Newark is our home city too. New Jersey Transit, our headquarters. I'm sitting right across the street from the station right now. We consider this our home base. And one of the goals is to see that if you are within 2 miles of our hub, our station, you shouldn't have to need or want a car. Transit should be there for you in one capacity or another, whether it's a light rail or a bus or a commuter rail. You should have that opportunity to get in and through and around the city as you would New York or any other major metropolitan area without the need of own personal transportation. To that end, the master plan is going to try to tie all that together in coordination with many of the other improvements going on, the TODs going on, the improvements across the street, the Gateway Plaza, tie it all together and make it one whole. Hopefully the sum will be greater than the individual addition of all the parts, and we think that that's entirely plausible. We are looking to improve pedestrian and vehicular circulation around the station. It is difficult to navigate. There is a history of all the traffic around the station because it is a hub. There's a lot of destination and transit traffic around it. We want to organize that better so that people who want to walk to the station on the street level have that opportunity. They should be able to freely go back and forth to the parks, the concourse, the local businesses, the office spaces. It should be something that is seamless. We are looking to revitalize the public space in and around the station. It's our home. We want it to have good curb appeal inside and out on both faces and improve that presentation. We are going through sustainability and resiliency upgrades, some of which you see ongoing right now. We have improved the light rail system so that it is more flood resilient, both electrically and from water intrusion. There is ongoing work at the boiler house along Edison Street, which we hope will one day be future resiliency for power. We want to make certain that the station is always powered. We do have responsibilities not just to Newark, but to the commuters, as this is our transportation hub for the Northeast Corridor. And Raritan Valley Line also ends here, as does the Jersey Coastline. So all those things have a center of focus point on Newark itself and the station. And the station improvements. There has been work going on, hopefully that you have seen. The work has not stopped in terms of improvements around the station. Robin has a lot to offer when he talks to what's been going on, but the constant, contiguous, and lockstep progress we have gone through in the station to continually make it a better station as a state of good repair, make it down to the tile level. We want this to be best practices, state of good repair, and quality of station. And with that, what I'm going to do is I'm going to hand it over to Rob and Persad to talk through the work that's been going on. And what's next?
Thank you, Rich. We're very excited about the work that's ongoing at Newark Penn Station. You can think of it, we're doing it in 3 different stages. There's the immediate state of good repair work that's been ongoing. As Rich has mentioned, we've been working there as a project team since the fall of 2020. We're going to talk a little bit later in the slides about the 2 additional stages, what we're calling the interim stage. and then the long-term solution. Some of the work that's been ongoing in this short-term phase for state of good repair to enhance amenities within the station. We're doing it throughout the concourse area, the main waiting room area, and the platforms, as Rich had mentioned. This is a photo of the bench restoration efforts. There's 22 historic benches throughout the station on the main in the main waiting room and on the platforms. And the photo on the left is the actual restoration that's being completed by our vendor in their shop. And the photo on the right is a photo of the final restoration after it's installed and in full use again. It's a very complicated process, and we needed to work with the State Historic Preservation Office on all the details to make sure we stayed with the original decor, design, and look and feel of these benches when they were going to be restored. And these 22 benches started restoration late fall of 2021, and we expect to be done before the end of this year. We also did a lot of work throughout the station in a couple of other areas. One for tile restoration efforts. Again, we had to work with SHPO on making sure that the tiles that were restored, renovated, and replaced matched the original decor of the station. And we worked to restore over 3,100 tiles at the various locations throughout the station with one of our vendors that was pre-approved by SHPO for this restoration type effort. We also used our internal workforce to paint the entire structure with a softer, whiter paint structure, over 30,000 square feet of painting. And we changed out and upgraded the lighting system within the station. Over 1,200 light fixtures were replaced throughout the station. This is a picture of the globe light fixtures in the main waiting room. There's 4 main globe light fixtures. These light fixtures weigh over 800 pounds. There's 30 individual light bulbs within these lights. And these are original to the time when the building was built back in the 1930s. So we are on installing, renovating these lights, and we are done with 2 out of the 4. And we're also upgrading the electrical components as a part of this project. And we're very excited about this component because this is one of the original elements. And again, we worked with SHPO to make sure we maintain that decor from that original look and feel back in the 1930s. We also worked on the exterior of the structure. We did a soft power wash of the entire structure. Over 30,000 square feet of surface was washed, and we installed over 8,500 linear feet of new and repaired bird spikes. As Rich had mentioned as well, bringing the main waiting room to its original look and feel, we did relocate the Dunkin' Donuts to the concourse area. And as a part of that effort, we were able to reinstall 3 historic benches that were moved and placed in storage when that Dunkin' Donuts facility took up some space within the main waiting room. And those have been put back and in place and are now in use by customers. We also did work in the bus areas of the facility. We upgraded all the lighting on Edison Place and Market Street. We replaced over 48 fixtures and upgraded over 48 fixtures. And we also replaced 22 sign structures, which equates to 44 total signs throughout the station to make them more energy efficient and more visible to the customers. As a part of the lighting improvements on the bus lanes, we are also improving the drainage within the bus lane areas, and we will be finishing up this project and resurfacing the bus lanes in the spring. And I'm going to turn it back over to Rich, who's going to talk about some of the additional interim solutions that we will be working on as a part of this broader effort at Newark Penn Station.
Thanks, Robin. So where we're going with the kind of the next level in the integration of the station. We have historic statues. These were actually statues from New York Penn Station that were famously salvaged from a dump. Someone had recognized what they were after the station was demolished, circa 63, I think, and salvaged them. And the closest cousin that station has is our own with Newark Penn. They've been rescued, and now we're looking to place them. They've been in storage at one of our facilities. We're looking to place them in real time out in the landscaping that we're going to do in and around the station between the Raymond Plaza West area. That's actually a pretty big deal. I know it doesn't look like that does on the facade, but to actually get pieces from a station that didn't survive and put it into this while we restore it, it sends the right message. The waiting room layout plans from 1954 that you kind of see there in the background, we are looking to integrate that with an improved food service area. There is an area behind the grand waiting room, which is looking to be a grab and go spot. We are looking to build out not only inside but outside opportunities for concessionaires and businesses to really turn the station into a place to be, eat, enjoy, shop, the full experience. We are also looking at, as I said before, things outside and inside. This is a great shot right here. You see on the left, when you come in from the Raymond Plaza area, you come through a long dark hallway that delivers you into the concourse where the McDonald's is and a few other of the ancillary items. But the idea is to turn that into, when you walk in on your left, or on your right, I should say, you'll have an open area, a place to shop, grab a bite, sit and eat, a direct connectivity into the grand waiting room. So that light will flood in. It should be a much more inviting space. And we're going to start restoring a lot of the flow that has been lost in the station since it was originally designed in the 30s. So that's kind of a big deal for us. On the left-hand side top, you see a vision of the future. What's shown is the ironbound exterior face, where we want to take what is now kind of a secured area. There's some security gates. We use it sporadically for loading. But when you walk out the grand concourse into the ironbound, you shouldn't walk out into a street. You should walk into an area where there's landscaping, where there's benches. It will be lit with cameras. We hope to build the city park, which is currently fenced off from access into it, so you can walk through paths and trees to get into the ironbound. If we can get you out of the station and you can enjoy that experience being out of the station, the next logical step is to keep walking and go into the town and enjoy the town. So that is something we're really looking forward to doing that. We hope to be able to invite a lot of the local fair food trucks so that people can walk out and enjoy the things that they would otherwise have to walk very far to. So we'll see how that plays out, but the vision is there, as you can see. Next slide, please. Robin, is this my slide or your slide? I forget.
I can take the next two.
Right.
So basically, we talked about the short-term phase and the intermediate phase, which is active in both construction and or design currently to continue to enhance the amenities in and surrounding the station. We are also just beginning to kick off the larger, broader $190 million project for the master planning and detailed design for the overall full station improvements and enhancements within the facility. This component will be, or this phase of the project program will be done in 3 different phases. We're currently active in phase 1. We are onboarding a consultant who's going to help us prepare a formal master plan and also a 10% concept design plan. And the process that we're going to be utilizing will involve heavy stakeholder engagement at the community level, the government level, the business level, and the operational level. and it will involve an extensive background program of gathering information on existing designs and amenities, and also conducting a very thorough, detailed survey of the entire structure, not only within the building itself, but surrounding the facility. Out of these efforts, from the engagement and the data gathering, we will create a formal station master plan and a 10% concept design plan that will allow us to advance to the next phase of this project, which would be go to from 10% to 100% design. And during this process, where feasible, a lot of the items I mentioned in phase one will require extensive coordination with SHPO, the city of Newark, and DCA as well for formal approvals for certain design elements and components. Where we can, under phase two, when we're going beyond concept design, we will advance documents, design documents to construction documents to try to continue evolving the success we've had with the early action construction items that we talked about earlier in the presentation. And then we're going to wrap it up and summarize it at the end. Rich, if you'd like to take this slide.
Sure. So overall, project goals, we went through a lot, but the idea is to preserve and celebrate the historic features. We have a very aggressive program for not only restoring the station, but also putting it on a site that is exciting, engaging, very vibrant. We do want to reaffirm the role that this is an economic driver in terms of what New Jersey is, what Newark is. It was built to be that economic driver in 1935. The goal is by the time this thing is 100 years old, it should be what that original vision was in terms of getting people into the city, building on that city trend of upward mobility that you've seen from the other slides, and building that as the linchpin of the transportation system, not only in the city, but also the state. We do recognize that there has been an era of disinvestment and state of good repair prior to Robin and my and the administration's tenure taking care of the station. So we do want to take care of the architectural needs, a lot of the structural and historic issues. It is worth noting, something I failed to note, is that this building is on the state and national register of historic places. There is a certain amount of responsibility and honor that comes with taking care of a station of that kind of heritage. And we do want to make certain that when people use this station, it should be seamless, intuitive, and enhanced and improved experience using our transportation system. Every mode that we have goes through this station. We want to make that as seamless as possible for everybody to navigate and understand and use to their benefit when they get through the city and the state. And we want it to be vibrant. We want this place to be full of energy and life and all the things that people want when they think about transit in a modern environment. And that's pretty much all I have. Robin, did you want to add anything?
Just that we're very excited to actually be engaged with this project. As I said, we've been working on different components of it since 2020, and we look forward to building to that larger, more broader project that will take into account not only the internal components, but more broadly, the surrounding area as well. And we thank you for your time this morning.
Thank you very much. And now can we turn to the Deputy Police Chief for his remarks?
Thank you for this invite. I'll make it brief. I couldn't agree more that, and the police department couldn't agree more here, that Newark Penn Station is the gateway to the city of Newark and all that is available within the city today and in the future. But I have to say that you can build great things designed for people, and if they don't feel safe, they won't come. And I can't be more a matter of fact about that. People have to feel safe to come, and that's not a COVID thing; it's physical safety thing. So, with that said, the police department at New Jersey Transit, our primary mission is counterterrorism. Newark Penn Station, being the largest hub of its kind in New Jersey, is a concern from a counterterrorism perspective. And then second to counterterrorism, crime suppression. The police department is heavily populated and assigned to that facility. We have seen conditions over the last, in some regards, in the last 3 months, conditions deteriorate to something that hasn't been seen in over 20 years. But with that said, we continue to reach out to our partners at the city government, partners in courts, diversion court specifically. We have a population that we deal with on a daily basis at Newark Penn Station that, if not given attention, will turn all good plans that we're seeing here and learning about as this moves forward. It will absolutely become problematic. So the police department has partnered a while back with the Attorney General's office for Operation Helping Hand. We have officers dedicated specifically to conducting outreach, making contact with those in crisis, whether it's an addiction, mental health, or just down on the luck, which we know can happen. And we are doing everything we can to facilitate their paths to success, meaning to migrate out of the facility. Was not built nor designed to be utilized for that, and to get them on a path to success. But if we don't have the will, not just at the police department, but as a community, as agencies, as local government, state government, to address that issue, it will continue to be something that we'll all, not just the police department, have to deal with, because the customer experience coming off of mass transit through the station to go and take part in everything that the city has to offer will be sidetracked because of that. So we continue to work every day with Rich Schaefer's team. We're appreciative of the fact that we're asked our opinion on certain things, like, hey, we're going to do this over here. What's your thought? And we always think of things from a counterterrorism perspective. Is what we're looking to do, making it an attractive target for somebody, for a vehicle, for someone to do something nefarious to ruin everybody's day. So we're always trying to put our input in to get people thinking, at least for a brief moment, about those concerns. And we always seem to have a receptive audience about that, because it's something that I think all of us as Americans should keep in the back of our heads. But moving forward, as this goes from into the 10% phase and then on, we'll continue at the police department to advocate for additional assistance and additional partnerships from the state level down to the city level, and all of our social service partners that we've had the fortunate ability to work with over the last couple of years, to get to the point where we can make a visible difference in people's lives and in the conditions at Newark Penn Station, so that no matter who uses the facility, it's a place where you can come to and enjoy all those things that Rich had spoken about. So we'll continue to ask for help in that. And I just ask that we keep some of these challenges in mind as we look at pictures and we see things for the future, that we can consider this seriously, or else, we'll be dealing with this in 2035 at the 100-year anniversary. And it'd be something that we should pride ourselves in saying, look, it's been 100 years and look what we're able to accomplish. And this topic should be one of the things we should pride ourselves in being successful with. And that's my brief.
Okay. For some reason, Maya, I can't turn my video back on, so maybe you can take care of that. Here we go. Thank you very much. We decided to add that presentation, and we're grateful to the Deputy Chief for joining us to be able to talk about this important issue, because bottom line, for so many years, the safety has been a question for people coming into the city, and things have really been excellent. There's been a lot of work that's been done on the part of many, and we're happy to see that there's been this approach and this attention. We've had lots of questions coming in. As I mentioned in the beginning, we'll take those as we have time for at the end. And if not, we will make sure we connect you as best we can to be able to get answers to the questions. I do want to mention one topic that came up, which is equitable growth, because that's something that we're going to be talking about tomorrow when we do our city residential panel. We are talking about Newark being an equitable city, and some of the projects that we're discussing have either a good portion or even 100% affordable as part of them. And one of the projects that we're discussing, Fairmont Commons, has a combination of home ownership, which has been an issue in the city of Newark, and also the affordable rental as part of the project. And one of the things that we're seeing is that development is continuing in with the inclusionary zoning, which demonstrates that it is possible to build in an equitable way in the city of Newark, which makes us a model for other cities that are having more of a challenge with that. So I'd like to now move to our next presenter, Matt Flatt. And Matt, I will turn it over to you.
Thanks, Barbara. Let me share my screen. All right, everyone can see my screen and everyone can hear me?
Yes, you're good.
Yes.
Yep.
Great. All right. Good morning, everyone. My name is Matt Flath. I'm Vice President of Asset Management at Onyx Equities. We are the owners of 1, 2, and 4 Gateway at the Gateway Center. I want to start off by thanking Barbara and NRBP for inviting me to speak on the panel this morning. I'm here to give everyone an update as to the progress we've made on the retail component, specifically of the redevelopment of the Gateway Center, as that's the part of the complex that so many people interact with and affects most people most directly. As most of you know, over the past 18 months, we've been working on a multi-million-dollar and the tens of millions of dollars renovation of the Gateway Center, with much of that work focused on enhancing the pedestrian experience in and around Gateway. Our goal is to transform Gateway from a historically isolated complex that many commuters simply walked through to get to their destination to one that embraces the vibrancy and energy of the surrounding area, while also being a beautiful place to work, get lunch, or simply hang out while waiting for a train, being we're right across the street from Penn Station and actually connected to it. So the renovations are mostly centered around the existing concourse walkway that connects the 4 Gateway buildings to each other, the parking garages and Penn Station. It's the area highlighted in blue on my screen here. As you could see, the buildings that we own, 1 Gateway, 2 Gateway, and 4 Gateway. 3 Gateway, which we don't own, is part of the complex and is also part of the overall renovations of the complex. This area, which has historically been referred to as the concourse, we've rebranded as the junction, which I'll go into later in the presentation. The other big part of the renovation is the new grand entrance we are constructing on the street level of 1 Gateway facing Penn Station, the area that I'm circling with my mouse right here, right above Raymond Plaza West. So we're about 2/3 of the way through construction. We're still a few months away from completing the renovations. So I'm going to quickly go through a few before and after slides showing the state of Gateway before we started our work and what the final product will look like. So to start, if you come out of Penn Station and you look across the street, this is what you would have seen 18 months ago. A very kind of dark, isolated area, no clear entrance into the complex. And again, being one of our primary goals was to enhance the accessibility, both visually and physically, into the complex. We are now, this is the after, where we created what is known as the Jewel Box, the main entrance into Gateway. There is street level retail space, which has never been part of Gateway before. It's one of, in my opinion, one of the best corners in all of New Jersey from a retailer perspective, and it has always been underutilized. We're very excited to be able to add approximately 6,000 feet of street level retail right across from Penn Station. As you walk into the new Jewel Box, this is what you'll be greeted with. We'll have activation retail kiosks on the ground floor. That 6,000 feet of street level retail space will actually face into the jewel box as well, so people can access it both directly from the street as well as from within the complex. As you walk up the stairs, this is what you were historically greeted with. There were a number of businesses there. They all did fairly well, but they weren't very cohesive. So the idea is to have a unified storefront development, unified signage program, update the flooring, lighting fixtures, all the aesthetics, and this is what the final product will look like following the renovation. This is the new entrance into the One Gateway office tower. This is if you walk out of what was the Hilton, now the DoubleTree Hotel, near the bend in the concourse to Penn Station, this is what it previously looked like. This is what it'll look like once the renovations are complete. As you walk over the Sky Bridge from across McCarter Highway into 2 Gateway, this is what it looked like about a year and a half ago. And this is what it'll look like once we're complete. We've renovated the storefront of the NJTV broadcast studio. We have 3 individual retail stores and a future coffee shop in the corner here. You walk from 2 Gateway into the 3 Gateway garage, and historically, this is what it looked like. This is post-renovation, the new aesthetics. And this is finally the entrance into 4 Gateway near Mulberry Street and Prudential Center. So during the process of designing improvements to turn Gateway into it should have always been, we quickly came to the realization that no amount of terrazzo floors, fancy glass jewel boxes, or wooden brick accents would create the level of energy we wanted to instill in the project. That energy level would depend on the retail and dining experience within the concourse that runs between and connects all the buildings. The wrong mix of restaurants and retailers would result in Gateway being a beautiful place to walk through, but nothing more. The right mix, on the other hand, would bring the vibrancy of a Reading Terminal Market in Philadelphia or Chelsea Market to New York into the complex. We have almost 100,000 square feet of retail space that runs through the complex. The space never had a name or an identity. People just referred to it as the concourse retail space. So our first step was to actually rebrand the space to reflect what we want the space to represent. We chose to rebrand it as the Junction, as this area is literally serves as the junction between Penn Station, the 12,000 people that work in Gateway, the tens of thousands of people that live within walking distance of the complex, the 80,000 people that use Gateway as a pedestrian thoroughfare every week, and the 2 million people that visit Prudential Center every year, many of whom come through the Gateway through Penn Station or park in our garages. After rebranding, our next step was to find and partner with the best and most exciting food and beverage concepts in the area. So we spent the last 2 years meeting with dozens of New Jersey and New York-based food and beverage operators, pitching our vision, what the city of Newark has to offer, and what the Junction at Gateway can become. We found there was an incredible response. The excitement level within the food and beverage industry about the project went viral. The first few operators that we got to commit to the project would actually, without us even asking, would pitch the project to their friends, their associates, people that they know in the business. And it essentially created a snowball effect where we had one after another different restaurant operators from all over the area coming to us asking to be a part of the project. The end result of these efforts are the following restaurants and retail operators who officially signed onto the retail component of Gateway. As you can see here, we have a full service Serafina with full bars. Many of you know it's one of the most famous Italian concepts in New York City. They have their pizza concept Farinella that will open in a separate space. We have Fresh & Co., who has over a dozen locations in the city, salads, fresh juices, smoothies. Chip City Cookies, based out of Brooklyn. They're an amazing dessert concept. They make these gigantic, delicious cookies. Mock Bar Ramen, owned by Esther Choi, who's a celebrity chef. She's on Food Network all the time. She's an amazingly talented chef. She'll be opening, she has a location in Mock Bar, a location in Chelsea Market, and several others in the city. She'll be opening a location within the Junction at Gateway. 375 Chicken and Fries. They have 4 locations. They're international. They're in Hong Kong, Qatar, Lower East Side. Beautiful Instagram-worthy chicken sandwiches. Greek from Greece Cafe, a Greek bakery, salads, sandwiches, soups. Over a dozen locations within New York and New Jersey. Brookdale Burgers, they're a New Jersey-based restaurant concept who's going to open up a burger stand within the complex. And then we're very excited to announce that actually we'll have the first daycare center to ever open within Gateway, One Step Ahead Learning Center, where that is going to open up a approximately 5,500 square foot daycare with outdoor play area within the Junction. the variety of cuisines that we're going to offer here is amazing. All the names I just mentioned. So we still have a few more spaces available, 4 to be exact, for which there's still a tremendous amount of leasing activity. We're also in the final stages of a contest that we've been holding over the past few months, where we are going to award a fully built out restaurant to one Newark-based restaurant operator or Newark resident. We actually received 30 applications for that contest. We've selected 5 finalists, and we hope to announce a winner in the coming weeks. So between the contest winner, the other interested parties, our goal is to be 100% pre-leased by the time we host our grand opening later this year, which we're extremely excited about. And I want to thank everyone for the time for the presentation, and we look forward to hosting everyone at Gateway at the Junction. We hope you come here and have lunch, have dinner, bring your family, and we really look forward to the Gateway not just being known as the center of Newark from an office perspective, but we also want it to be a cuisine, food, and beverage hub within all of New Jersey. So thank you all.
Great. Thank you so much, Matt. That was amazing. It's really exciting to see how much energy you're bringing to the Gateway complex. If I could ask all of the presenters to turn on their cameras, I'm going to take just a couple of minutes to try to respond to some of the questions that came in. Because we did get a number of questions. I'm going to start with a couple of Penn Station connection questions. The first is one about the east connection to track 5. I'm not exactly sure what that refers to, but Robin and Rich, you may know.
The east connection to track 5. I think we're going to need a bit more specificity.
Okay. All right. Maybe I can, it was an anonymous attendee who asked about that. So if they want to let us know who they are, then we can talk about it. The other question of connectivity was about the Mulberry Commons and what's the status of the connection there between the bridge and the station.
Mulberry Commons, to the best of my knowledge, is being developed by the city and by that developer. That is not a New Jersey Transit specific project, and I can't comment on exactly where that is right now.
Okay. Yeah, I just didn't know if NJ Transit had a role in that, or if it was going to be completely privately developed. We know that that Edison Properties has been leading on that, and there are others involved. And for Matt, when does the Jewel Box open? Is that when the grand opening is planned later this year?
Yeah, it's
yeah.
towards the middle of this year. Yeah.
Okay, great. All right. Just bear with me while I refer to the other questions. Someone asked about local residents, and you'd only noted the one that's in the competition. Will there be plans for other Newarkers, local restaurants to be part of the complex?
Yeah, our hope is actually to have multiple. There's an amazing talent pool within Newark, and we saw in the 30 applicants we got. So the contest is just for one, but we really did that to raise awareness of the complex and what we're doing here amongst the local restaurateurs and business owners. So we're starting at one, but we sincerely hope to have multiple by the time we're done.
Mm-hmm. Okay, thank you. And then in terms of the restaurant mix, and I'm going to ask this both of New Jersey Transit and Matt. Matt, you mentioned Serafina and that having alcohol and being a little bit more high-end dining. And the question is, will there be any other that would be more on the high end? And I'll start with Matt and then go to New Jersey Transit.
Yeah, so Serafina is the only planned full service restaurant at the time. Everyone else, it's more of a, you envision Reading Terminal Market where it's bustling, grab and go, common seating. That's the feel of the rest of the operators. I think we have space in the complex to do additional full service restaurants in the future, but right now, Serafina will be the only one. I know that a few of the smaller food stalls within the Junction are planning to have a liquor license. So it's whether it's for a glass of wine or a beer that they can offer. But so there won't actually be a full service bar at any of the others, but there is a possibility that there could be grab and go alcoholic beverages in some of the others as well.
Okay. And New Jersey Transit, is there any plan for a finer dining restaurant in the station?
That's going to be contingent upon when we revision the first floor. A lot of that concourse level needs to be revisited, and whatever concession spaces come out of that, it would go for a real estate to determine. It would be nice, but none of that has really been firmed up yet. We're not at that stage of development.
Okay, thank you. And in terms of funding for the Penn Station improvements, you talked about being at 10%. Is there a need to advocate for funding for the remainder of the work you hope to complete?
We strongly advocate for advocation of others. A lot of the work that we do at the station and at transit is funded through competitive federal grants and federal dollars. So every major aspect of work that you see us advancing, whether it's Platform 5 or Platform E, which is complete, or Platform D, which is in progress, Platform A, they're all applicants to federal grant opportunities. By and large, that is our best stream of large dollar capital. So we aggressively pursue those opportunities, particularly at Penn Station.
The reason we broke the project into those phases and went to 10% concept design, that's one of the milestones required for the various federal grant opportunities that are normally available. So we would be advocating for a mixture of the funding and include in that the federal funding availability.
Okay, good, thank you. And just seeing a lot of questions coming in, so I'll just take a few more. Someone comments that the bulkhead opening to the legal center is currently boarded up. And so there's a question about when that would be reopened.
I believe they've been reopened. I'll check with our property management team, but I know we had them closed during construction because due to the heavy construction that was happening within the concourse, it wasn't safe at the time. But I do believe they were recently reopened.
Okay. I mean, we can answer that afterwards, and if you can get us that information, then we'll include it in our thank you email. One for the thank you. Good. The deputy chief person thanks you for service in keeping travelers safe, and he wonders what additional steps have been taken to ensure safety on the train platforms in light of what we're seeing in New York City.
So New York City is certainly getting a lot of attention lately for all the wrong reasons. And we're doing what we can on this side of the Hudson to negate some of that negative attention. Police presence matters. We at the height of rush hour, both AM and PM and into the evening when we know incidents creep up, having officers present, visible to the public, matters. I think that no one can, you have a sense, you're walking a platform, feeling uneasy, you see a uniformed police officer there, things are a little better. We understand that. We understand that the New York City subway system is this vast expanse and they're having challenges patrolling that. However, for us at Newark Penn Station, our goal is to be as visible as possible. We're coming up with ways through technology, through uniforms to always keep progressive as far as making our officers as visible as possible to the public, knowing that we can't be in every nook and cranny at every moment, but we can certainly put people, police officers, where they need to be as visible as possible to the we call them a transit, you have your peak periods of travel, your AM and PM rush, and then off peak. And sometimes off peak into the evening could be challenging for us. So, Penn Station serves a lot of shows, even with people coming back post-COVID, going to sporting events, going to the Prudential Center, going to NJPAC, where people make connection to light rail. Being visible is all part of that customer experience so that they have a sense of safety and security. So we try to do that on a daily basis at Newark Penn.
Great, thank you. One additional question about the child care center. A person is applauding the fact that you've included that. And the question is, how will parking support drop off and pick up?
So the entrance to the daycare center is within the junction or the concourse level of Gateway. And so parking will be, you'll park in the garage and then either take the elevator up to the concourse level and walk to the daycare center, which there's a garage within one gateway. So it's very proximate to the daycare center. We're also working on a possible street level entry point that hasn't been designed yet, but we would like to accommodate that so you can go directly into the space. So we don't have that designed yet, but there will be immediate access through the concourse when they open.
Okay, thank you. And back to the Deputy Chief, question about whether there'll be a precinct in Penn Station, either for social services and or police.
So that's a good question. One, there is a police precinct inside Newark Penn Station. There always has been. It might not be as visible, but working with Rich Schaefer, we're coming up with a way, maybe in the future, to be more visible to the public during future builds. But in regards to a precinct or part of the precinct that would service social services, that we don't want. We've tried that. And by that, I mean, we tried that a couple of years ago with outreach. We don't want to service people at Penn Station. We want to meet them where they are and direct them outward from there. If you build it, they will come. And this is part of the big enhancement of Penn Station and the gateway, and it's great. But if you also build a facility like that in Penn Station, it will be the focal point. We have found much better success with our outreach efforts when we meet the consumer where they are and we direct them outward from there. However they need to get there, we will help them get there. But we've tried having that come into the station, and for all intents and purposes, we were overwhelmed. So the idea is to meet them where they are and help direct them out of the facility. Successful with that.
Great, thank you. Last question for what we can cover now. And to NJ Transit, who is the master planner for the station? Which firm? If you're able to say.
Well, we haven't formally executed the contract yet. We are going to meet with them shortly, and then we'd be able to, once we kick it off, that they're going to be very visible because they will be working very closely with those constituents that I just mentioned.
Good. If you're able to share that with us at the appropriate time, we can
Yes.
let
Yes.
everyone know and share it. Well, I'm grateful to all of you for excellent presentations, and thank the audience for being with us today. And I'm going to turn the program over to Chip Halleck, and Chip will close things out.
Thank you, Barbara. And thank you all for joining us for what's been a very informative, a little bit over an hour and a half this morning that I think has gone very well. Everything from Richard's discussion about the economy and what's going on to getting down to a more granular level in Newark and seeing that the numbers are certainly looking better and better as Newark continues its overall revitalization. The Penn Station improvements, obviously, this is something that's been a long time coming. We're thrilled to have helped and will continue to advocate for budget support for New Jersey Transit, both for capital improvements as well as operating, to ensure that the city and its residents, as well as others in New Jersey, are given the kind of service they need to get back and forth to work, get to the places they need to be, get to school, get to supermarkets, and meet the needs of those living in the city as well. It's great to see that work has begun. It seems that it wasn't that long ago. We were outside on a cold December day with the governor celebrating the fact that $190 million was going to be dedicated to improving Penn Station. And it's wonderful to see that work continue. Listening to the tremendous investment that Onyx has made in the Gateway complex is really inspiring. The amount of money and effort, the thoughtfulness about reaching out to local businesses has been terrific, and we're thrilled that the Gateway complex is really going from that place that was really, people were insulated from the city to really being an integral part of being on the streets of this city. So that's something certainly to look forward to. With that, I want to thank our team here, Barbara certainly, and Maya for helping to pull this off today, Nikki for her outreach to get some of your attention to make sure you attended this morning. I'd also like to thank, and I'm sorry I don't see him on, Scott Beresford from TD Bank, which is our real estate and economic development series sponsor throughout the year, enabling us to deliver informative programs like this. So we're very grateful to TD and for Scott's involvement on our board of directors. We'd also like to thank our sponsors who are up on the screen here, Genova Burns Grant, KSS, LMXD, NJEDA, Onyx, PSE&G, a Structural Workshop, and Turner Construction, and our media sponsor, New Jersey Advanced Media. It does take a village, and it takes all of you who have spoken this morning to help make things work in the city, and it takes the support of all those people, all of our members, to make NRBP an effective organization, and we appreciate your support. We're very happy that tomorrow we will be in person at NICO at NJPAC for the second phase of this real estate market forum, and we certainly look forward to next year and are hopeful that we'll all be together in one place, face-to-face, live, 3D people celebrating the real estate market and the contributions that it's making to Newark's revitalization. With that, I thank you all very much. Have a great day. We look forward to seeing you all in person again very soon. Thanks. Take care.